What about the broader association with the Liberty Group, the fact that you haven't done that well this time around in terms of performance? Everyone knows that perhaps with hindsight the decision to de-risk the balance sheet and retain only 10% exposure to equities may not have been the right move, given the fact that you missed out on a 40% rally in equities. Bruce Hemphill, the CEO of Liberty, is saying that it wasn't a mistake. You stand well positioned if we do see a double-dip recession with the de-risking of your balance sheet. But that perception that you're tied to a broader group performance that isn't quite there, is that damaging your traction in the life space?
I think that we had a bit more than 10% exposure, was over 20% on the equity side, but I think that a lot's changed, and the association with Liberty Group is very positive, it's good, it's strong, and we're focusing on the life business, and that was a decision that was taken because the world has changed. So with hindsight, and hindsight's perfect science, the timing of the decision was wrong. The timing, given what markets, when we put it in, market shot up, but it's at that particular time when people were looking at capital adequacy, making sure we've got enough capital to meet all our claims, meet all our policyholder expectations, make sure that the market could go down another 20, 30, 40%, and we would be fine. That was our goal, making sure that we were extremely solvent, and we achieved those goals. And
Stan Lib's performance over the last 2 years hasn't exactly shot the lights out again. Is that a perception that you're out to change?
Yeah, it's quite interesting. Stan Lib won 7 Raging Bull Awards, more than any other unit trust business in the country, and that included 2 equity awards, and in one being the industrial space. So I think that certainly the life company's performance, which isn't published, like the unit trust performance has actually been above benchmark, so we're comfortable with that. Fixed interest, property, cash been very good. The equity side, the last 12 months, as the market's seen, Stan Lib has been behind. But the key thing for us is the right people have been put in place now. We've beefed up the teams, and this is a long-term game. You look over 3 and 5 years, and we're ahead of all our benchmarks. So it's a long-term game we're in. And certainly the asset management side is critical, because at the end of the day we've got to manage people's wealth. We've got to meet their dreams for retirement. They have a goal, they've got savings requirements. They need to be comfortable that their money is with a trusted brand, and the Liberty and the Stan Lib brands are trusted. If that's the peace of mind that you invest with a group like Liberty. So we may have gone through a tough time on the Stan Lib performance space. I mean, that was well publicized, and certain of the funds that were publicized are very small funds. A small cap fund is a very small fund. There's not a huge clients there. We're not happy about that one, but rectification has taken place. We've brought in new people, and that's the comfort you get from being with a big group.
With the de-risking of the balance sheet in the broader Liberty Group, are you bracing yourselves for a double-dip recession?
No, I think that I think we're probably seeing signs picking up, if anything. Job loss, we seem to have reached the bottom of the U in terms of
so is there positive momentum around those boardroom tables at the moment? Do you feel that?
I'm feeling it. I think that the worst is behind us. That's not to say I don't think it's going to be V-shaped. We don't think straight away we're going to come out of a recession and there's going to be thousands of jobs out there. But I think as a U-shape, the recovery's taking place. You're looking at the indicators. You look at job growth. This is it's starting to pick up very slowly, but confidence is picking up without a doubt.
The consumer in South Africa, in dealing with that affordability issue, having to be more innovative, as you've already said. Talk me through your LSM. Are you across the board in South Africa? Yeah,
we're across the board. So at the lower income levels, typically people earning less than 5,000 Rand a month, we have a business that offers products ranging from funeral products, life cover, as well as simple savings products for that market that are pretty cost effective. It's a big growing part of our business, and I think certainly the challenge for us in Africa, not just in South Africa, is the previously uninsured actually give them products that they can afford and that are relevant.
Do you work hand in hand with the banks trying to bank those that were previously unbanked? Is there some synergy between those?
Yeah, there definitely is. Together with Standard Bank, we offer what we call bank assurance products. So the entry-level market, if we call that, if we look at that segment, there certainly are products that we offer there together with the banks, and it's growing, and it's certainly an area that we see huge potential. The key thing is that as clients migrate, so you start off earning less than 5,000 Rand a month, but then your salary increases, your job goes up, you want to be there and you want to migrate with your customer as their income bands change and as their lifestyle changes. And that's a key strategy for us, to be able to move with our customers as they move.
You mention an African footprint. Are you going in on the back of Standard Bank, given the fact that they have diversified appropriately across the continent?
Absolutely, and I think it's a wonderful opportunity for us. So we would like to, each country is unique, has different cultures, and we certainly would like to replicate a model here across the African continent. Standard Bank's got a presence in 17 African countries.
Who are you competing with in the life space on the continent?
On the continent, there are local players in each country, but there isn't a particular South African competitor that we're competing with out there. I don't think there's another banking group who's got the reach of Standard Bank on the continent. So that's a fantastic strategic advantage for us. It's more local players in each territory. And the way to grow the share is using the bank, but also via acquisition. And we recently did an acquisition in Kenya.